Well, first and foremost, thanks so much for coming to the second annual Riguardi Alexander Showdown. For anyone that was here last year, I think sort of across the board, the feedback that we got that this was one of the most productive and entertaining real estate events that they've ever been to. So couldn't be more excited to bring these guys back together.
We've got a lot of issues that are going on right now. There's a flight over to the west side and to downtown. This is actually an interesting slide because if you go up and down the list here, most of these tenants are gone already. If you take BCG, they're ensconced over at 10 Hudson Yards. The Bingham folk obviously out of business. Citibank downsized from Midtown. They've downsized into, what is it, about 300,000 feet now, Andy, over at 601? And the rest of their presence, they had 2 million square feet in Midtown. And the rest of the presence is down at 388, 390. They're giving up 111 Wall, which is 1 million square feet in 2020.
I'm optimistic, right? I'm optimistic about Park Avenue and Avenue of the Americas because of a couple of things. They're both big, wide thoroughfares. They both have great transportation, particularly for the E and the F train, where, you know, that's the connection to Brooklyn and Queens, and that's where you're going to get all this young millennial talent that can't afford to be in a loft in Soho. That's the ones you read about, but the ones who come and do the job every day are living in Queens and Brooklyn, and they're taking the train. So it's going to take time to weed itself out, but I think eventually the markets will be fine.
All right, well, this is basically just a breakdown right now, the tenants in the market from 2007 to now. And as you can see, the fire tenancies has gone down fairly dramatically. It's probably almost 45% down. And you can see the growth, which is interestingly, in the healthcare and professional and business services. And that's kind of driven, if you look at in Midtown, you got Mount Sinai making a major commitment of 500,000 square feet to the mobile building. NYU net leasing, what was it, 41st Street, right? Which is about 380,000 feet. And you've got a pending deal right now, it looks like on Park Avenue for New York Presbyterian of almost 500,000.
The other thing that's not on the chart, but is definitely something to keep your eye on, is the WeWork factor, right? They're leasing a lot of space in the city. They continue to sign more leases. And you know, if that business model should waver in any way, you could see space enter the market from them. And so right now they seem to be, from all accounts, doing very well, but it's something that I would, if I were in your shoes, if you have them as a tenant, or thinking about, you know, having them in your building, I would keep my eye on it.
So this basically just gives us an outline of the density factor, right? So you can see the history of the density factor from 96 to what we're looking at relative to new construction right now. So 250 a foot per head down to 110. This goes back to the discussion Peter and I and group had about density factors. I can't tell you how important it is right now, but you've got to have your buildings operating, perhaps not for 110, but certainly in a 140 to 150 range.
So a couple thoughts on the new construction. So the financing market in the last year or so, I think, has changed dramatically. What was needed to finance Manhattan West for Skadden is much more stringent to finance a building today for BlackRock. So the banks are looking for a lot more equity commitment, you know, 40, 50% equity commitment. They're looking for more recourse. They're looking for a higher level of pre-leasing commitment. So I think that will be a factor in some of these new buildings. If BlackRock should decide to stay, you know, I don't know if 50 Hudson or the Spiral get built. If they decide to move, maybe one gets built, the other might.
Not without another anchor tenant.
No one's
going up with $2.8 million for spec.
You probably know. We know Pfizer's might be another new tenant that's going to interview brokers and maybe enter the market, and maybe they can anchor a building in a year or so. So I think it's going to be harder to build these buildings.
So here's our slides. We talked about our new construction. It basically just it's a lot. Most of these, as you can see, have basically been they're either smaller product or they're product that's underway. 3 World Trade Center, 1 Manhattan West. Well, 1 Manhattan West is going to be a really competitive situation. I mean, I know you're dealing with them now, you gotta be like, they're gonna make a deal, right? As they're going up. 1 Vanderbilt, 2 Manhattan West, which is really gonna be a built-to-suit and a question mark. 3 Hudson Boulevard, which is Moynihan. That's a great piece of land at this stage of the game, right? Somebody needs to buy it, and then they're gonna have to develop it themselves, probably. 2 World Trade Center, which is probably out in the distance. We don't see that really coming online any time in the next couple of years.
So obviously, most of you have seen this slide before. Without getting into detail, I think the past 12 months, obviously, I think the important things to point out, Midtown, asking rents are up almost at all-time highs. The reason of this jump is because of 2 buildings, 1155 Avenue of the Americas, coming on the market from Durst, as well as 390 Madison, L&L. And those rents are $80 to $130 plus, so that's really caused that uptick.
I mean, 13 and 14 were such huge years, both for the market in general and for Vornado. I mean, we did headquarter deal after headquarter deal at 1290. Going into 15 and 16, Josh really started doing the large leasing at 90 Park Avenue, and we did PWC and deals like that, but we definitely saw a drop in the headquarters deals, and that's really what's gonna move these statistics up. We're still doing a lot of deals, our 20s and 25,000 and 40,000 foot deals, but we've lost, what we haven't seen in volume is large 100, 150,000 foot transactions that will move the velocity of the market.
So I have the most fun working on Brooklyn projects. I mean, it really is the best part of the day. First off, we've got a group of young people in our office, names that might not be familiar to you, like Howard Hirsch and Stephen Rotter and Mike Berg, and these guys just know the market, they know the millennials, and it's just a lot of fun dealing with projects. We are the agent for Empire Stores, which is in Dumbo. It's that sexy brick and wood building that they added the glass top. They're doing leases there in the 70s and 80s per square foot, which is just shocking.
So we just thought we'd touch on Jersey a little bit, because this goes back to our original slide when we talked about the diminution of fire in taking space in Manhattan. What's happening here is the big institutions, right, the mainstays that have been here for decades and decades, are not growing. They're downsizing, right? They're modernizing HQs. There's no question about that, and they're spending money on that to a certain degree. But they're taking all excess operating ops and tech folk, administrative folk, anybody that they can squeeze out of the Manhattan, they're squeezing out right now. And I don't see that New York's going to be doing a whole lot to prevent that from happening.
You got to have sort of 3 plans going. First, this big tenant, right? Are they going to leave? Are they going to stay? Do I want them? How can I make them an offer to stay, which is a low capital solution for me, and therefore I can offer them the most attractive rent deal. And then if they push back and say, look, I'm never considering your building on a low capital, I want it to be upgraded, then I have that plan. And then you got the third plan, if you lose them, where Bob is. It's sort of like, who's in the market, who's real. We all know, we're in this business, and when that right tenant comes along, you know it. Right, and a lot of the other ones you kind of feel good about, but when that real one comes, you just can't lose it. And in this market, if it means another $10 in TI or a few more months free rent, or the first round draft pick, stick it in there and make the deal.
Absolutely.
Right.
Absolutely. That's what we're all in business for.
Right.
Anybody else? Thanks. Hope it was informative.
Thank you.